Welcome, property navigators. Today we are exploring the immense potential of Logan City, a rapidly growing LGA just a stone's throw from Brisbane. We'll shed some light on what makes this an appealing option, its limitations, and how you could make a successful investment here. We're taking you on a comprehensive journey and providing some crucial insights. So let's get into it. Logan City Council is a progressive local government that has been planning what the future of Logan is going to look like for some time. There's plenty of newer videos on the Logan City Council's YouTube channel that clearly show the future plans of the region, and it's actually quite impressive. You should really check these out. Now let's talk more about the areas in this LGA. If you watch our online content, you would know that established areas offer the best investment opportunities. Steer clear of any new estates. With smaller land sizes being developed within some of these locations, these new housing developments demand higher prices from owner-occupiers, which drive up the value of already established properties. Now, the eastern side of the M1, namely Daisy Hill, Rochdale and Cornubia, were traditionally the only premium or higher end area of Logan. Now, this has changed with undervalued moderate to higher end opportunities that have higher land content now being found on the eastern side of the M1. Logan City has two priority development areas, which are parcels of land identified for development to deliver significant benefits to the community. Now, these two priority development areas in Logan include Greater Flagstone and Yarrabilba areas. There is also a handful of major projects that will drive connectability and jobs within the Logan region, bringing more people into this local economy. These include the Coomera Connector, Daisy Hill and Logan M1 upgrades, Logan and Gold Coast Faster Rail, and the Logan Hospital major upgrades. Now, let's dive a bit deeper into Logan and some of the suburbs here that really stand out for investors. Many of these locations, whilst having significant uplift during the COVID boom, still have more left in the tank when you factor in historical growth rates, making them undervalued compared to other suburbs. Their current affordability is still good. Rental yield returns and prospects for capital growth due to population growth and major infrastructure projects are also relatively high. Now, out of the 70 suburbs that Logan's made up of, I'm going to be pointing out 3 of these as the better suburbs to think about investing in. Crestmead, Eagleby and Waterford West are a few of the true stars of Logan where strong to moderate capital growth around the 8 to 12% mark is highly probable over the next 12 to 36 months. Now, they have good and improving yields still to come, meaning there may be a golden opportunity in these 3 gems. Now, these suburbs allow an investor to command a quality investment property on bigger 600 to 800 square metre blocks, and as an investor you already know, the more land, which is the appreciating component of the deal, equates to more capital growth potential. Waterford West is a suburb on the rise, with properties in the older estates with bigger blocks the target for investors. With a solid growth forecast, the place is definitely one to keep an eye on. On average, the suburb has grown 8.2% per annum over the past 10 years, but in the last 12 months, the growth rate has dropped 5.8%. This slow recent growth offers the best opportunity for investors to re-enter these markets. Eagleby is another fantastic option, with similar established housing like in Waterford West, the target for investors. Offering immediate yield return and the strongest capital growth opportunity from each of these 3 suburbs, if I were to recommend where to start, Eagleby would be my top pick. Considering its proximity to the current M1 and future Coomera Connector, it will be one of, if not the most connected suburb in Logan. On average, the suburb has grown 9.1% per annum over the past 10 years, but in the last 12 months, the growth rate has dropped 5.9%. Again, this slow recent growth offers the best opportunity for investors to re-enter these markets. Now, let's not forget about Crestmead. The suburb has grown 9.5% per annum over the past 10 years, but in the last 12 months, the growth rate has dropped 7.9%. Now, this slow recent growth offers the best opportunity for investors to re-enter this market. The factors touched on earlier in this video highlight the growth drivers that will continue pushing these suburbs above average growth rates. Now, alongside affordability and the future impact of rate cuts, which will bring more buyers and therefore demand, placing future pressure on these markets, which currently have 30% below their 5-year average of supply of housing. Beyond just the capital growth, what makes these suburbs truly stand out is the potential for value addition. Now, in Logan, there's an opportunity to add serious value to many properties requiring cosmetic renovations, and the ability to add auxiliary dwellings, better known as granny flats, that you can legally rent out as a separate dwelling. So imagine boosting your yield by an incredible 50%. Now remember, while these opportunities sound great, every investment does have its own challenges. Some parts of Logan are prone to flooding. Certain areas are in their early stages of gentrification and might have a lower socioeconomic stigma attached to them compared to some of the other locations in the LGA. Now, the priority development areas are not in a significant growth phase yet, and there might be better opportunities elsewhere. And lastly, beware of any new estates with smaller land sizes because, as we always say, land appreciates in value over time. There's no denying that Logan is brimming with potential for property investors. The growth, the prospects, the opportunity to add value, it's all here, but it's equally crucial to understand the challenges and plan for them. So is Logan right for you? If you're seeking robust capital growth, rental yields, and the potential for value add, the answer could be a hell yeah. If you want to have a chat about any of the info in this video, feel free to give the team or I a call anytime. And until next time, happy property navigating.